Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. We're going to kick off today's look at the market with what's going on in the calendar. So we're going to find what those hot zone events may be that could be adding some volatility to what has been largely an overall bullish September, obviously, right? Seasonally, it was supposed to be an absolute slide lower, ended up being punching up to SPX all-time highs. And October, while choppy, has been certainly not breaking down through any important support levels, so it's hard to be bearish. Now, if there are going to be any catalysts for movement, whether that be up or down, let's take a look at our economic calendar here for Wednesday the 2nd. 8:15, we already had the ADP numbers, which I would say that overall, after 8:15 this morning, there's been general movement to the upside. And then if you take a peek here, we have FOMC speakers. So at 9 a.m., which is basically right now, are we going to see any volatility from FOMC member Hammock? Now, some of these FOMC members, especially the two that we have slated for 9 and 10:05 a.m., are newer members. We don't really have we have a general gist of whether they're hawkish or dovish, but they're new members. It's not as if we know them as well as, say, Bowman, who's been ridiculously hawkish. In fact, Bowman was the one dissent from the last meeting for the 50 basis point cut. Bowman was in favor of 25. Barkin has also been, again, these are a little bit more known messages as opposed to the first. We have 4 FOMC members speaking today, so shan't be boring. 8:15 a.m. Eastern ADP sent things up, and it looks like this 9 a.m. event might be a little heavy as we see whatever it is that FOMC member. And if you're wondering who is this person, right? It's the Fed Bank of Cleveland is where Beth Hammock is from, and again, voting member, and that matters. That matters. It's not just one of the members who's on the Federal Reserve; it's that voting member. And many of those positions are rotating positions, hence the new names from time to time. So we got a lot going on. Forget the data. We got a lot going on with 4 separate Fed members today. All right, let's go see what we've got in terms of the daily time frame and where we sit in relation to that. Now, I did not take this position. I took buys elsewhere. I've got nothing but long calls in the book right now. However, and this was something, both the S&P and the Dow were something I was looking at for the most part for long positions. So let's take a look at the S&P as to why and how. This range in here is known as the daily price movement range. This gray area is support where I would look for long calls. And, I chose not to do it because there are some sectors that look better than the indices. And sometimes we have to accept that certain sectors can be outperformers within the index, and it makes sense to go long calls, say, in an individual stock or an individual sector, rather than sort of the tide concept of just taking that index. However, we're still holding above yesterday's low, which was down at 57.33. We are, however, trading below the close, which was 57.58, not by a lot, by 10 points. So I can't call this much more than really an inside candle at the moment. It's a little bit more on the bearish side of things, but for now, it's basically a pause candle. And doesn't surprise me. 4 FOMC members speaking today. All right, so let's move on over to something like bonds. With this many FOMC members speaking, what's going on with bonds? And a lot of folks have been asking me, Rog, is it time to get into bonds? I've been leaving bonds alone. Bonds had a really good bullish window from basically August to mid-September. And August to mid-September is an opportunity for bond traders to look out to September, October, November, December. So November, December is what's being thought about in here. In other words, are we going to see the rate cuts, and how many are we going to see each meeting? And it looks like we're going to have a 1/4 point rate cut in November and another 1/4 point rate cut in December. But then things might get a little fuzzy, say post-election. Things might get a little fuzzy after the new year. And bonds are in a waiting period, not because right now they don't believe that Jerome Powell had the conviction to make that bazooka of a 50 basis point cut. Just they don't know what's next. Remember, bonds are always thinking anywhere from 3 to as much as 6 months ahead. And right now you can see the pause. It's not about the now, it's about a quarter from now. And that's where I'm going to leave bonds alone because clearly we don't have the consistency of the green candles. We don't have the trend. Too many red candles for my comfort. And here, look, I know we want to think about where rates are going, but we don't have to trade it through bonds. Stocks have a clear response right now to the lower rates. Gold is having a clear response. If we even jump into something like looking at the euro, a little bit, not much, but a little bit clearer than bonds. So we can pick a symbol that we want to trade, or we can learn to build a watch list of things that have the best chance of follow through. And you would think those two lists would be the same, but they're not. For most traders, where they struggle, and this is one, I'm talking from personal experience from many decades ago, and I'm talking from watching traders now in modern markets, which is they tend to find a couple symbols they like. Maybe we've all been guilty of this from time to time, and we just force trades in those symbols. We know them. They paid us in the past. We really like them. It's what's being talked about. It's what everybody's doing. Yeah. So watch list building should really be, does this symbol have a high likelihood of follow through? Which is why the trades that we put on the 30th of September, which are many of the ones we're handling right now, were the ones that had the best structure, therefore the best probability for follow through. And this is such a neglected aspect of account growth. And you all know, I've had my mind on account growth for a really long time because that's our job. Our job is not to put on winning trades alone. A lot of traders think, what's your job? To win. Not really. The first job is don't lose, right? Who remembers that list that made famous by Warren Buffett, the 2 rules for, he used investing, but they kind of apply to trading, sort of. Rule number 1, don't lose money. Rule number 2, see rule number 1. I don't like the way that's phrased, but we get the gist of it. The first thing we should do is stop losing, right? Or as Charlie Munger has been credited for saying many times, don't worry about being so smart, right, and clever. Just don't be dumb. And to me, that don't be dumb is, let's focus on the thing that's in the way of account growth. And winning trades are just one piece of it. Managing risk, making sure losers don't outsize our winners is step 1, right? Step 2 is what we're talking about with looking at where the follow through is, finding symbols that can most likely follow through. That's watch list building. That's step 2. Step 3 then becomes position sizing for growth. So once you have the discipline, right, you have the backstop of, okay, I have a process that makes it actually hard to blow up accounts, makes it actually hard to have outsized losers. Now I know how to pick the outsized winners, step 2. Now I can start position sizing for growth. And this is markedly different than simply a risk managing process, which I like to call the Holy Grail. That's only step 1. And then one of the things that I've been testing, as many of you know, for 6 months is, gosh, small accounts, we like to grow to where we feel we have a little bit of breathing room, right? We like to feel like, okay, I can take a breath. I'm not always on that ragged edge of dealing with small account problems. And one of the things that I found that I never would have thought this, in fact, a lot of the reason I started, this is kind of funny, I haven't told anyone this yet. A lot of the reason back in April that I started this SPX testing was to sort of debunk it, like to tell folks, look, I don't trade SPX. Here's why I don't like it. I tested it for 6 months. Here were the rules. Doesn't work. Stop spending time and money and wasting time and money on 0 days to options expiration. That's what I wanted to prove. That was the thesis. And then 6 months later, I thought, oh gosh, maybe I'm wrong. There are rules and there are timing and there are structure and setups that actually can let even a small account trade SPX. So there are a number of things that I started off with, a couple rules that I had to operate by to test this SPX. And if you haven't already registered, simpletrading.com/reliable tonight at 8 p.m. Eastern, New York time. I'm going to be talking about how we're growing an account through September. I'll show you where we are. You probably got the email where I went 18.5 to 26. That's actually not true. It's more than that. We did almost 50% in September. So almost 50% account growth in September, which is in and of itself cool. And that doesn't even include the SPX and things like that. Those are swing trades alone, which is probably my favorite way of trading. It's the one that most traders, I think part-time traders, can do, right? Anyway, we'll talk about all of that at 8 p.m. tonight, including more specificity on what were my rules. What type of trades were you putting on, Rock? Spreads? What was it? And then ultimately, what did you find after 6 months, going into 7 actually, of testing? So check it out, simpletrading.com/reliable. And it's not just about a favorite symbol. It's about how do you manage the market we have, not the market we wish we had, and grow an account. Because gang, that's why you're here, right? You and I are here to take a little bit of money and continue to consistently grow it. That's why we respect the Jim Simons of the world, the Warren Buffetts of the world. What is it that we respect, aside from the fact that they're billionaires? That's pretty cool too. But they took small amounts of money and have consistently grown it for decades. That's how they became billionaires. So, what can we learn from that kind of process? And we'll talk about that tonight. All right. That being said, I do see a few questions that are popping up. Do I still use the clearing range in initial balance to day trade? Not as much. I still track them, though. Thank you for asking. I still track them because they're very good mile markers for whether or not we're going to have the kind of day that could continue or the kind of day that chops. So they're still very important, but I've really begun to appreciate more and more the value of understanding historical volatility specific to the time of day. So while I still know where they are, we still track them. Most of what I do now is relying on hourly price movement ranges for intraday day trades, intraday today trades, right? A day trade is a today trade. We get in and get out today. And then I'm using the daily price movement ranges for the swing trades. So I always know where they are, but I don't use them for entries as much. All right. Next up is where the NQ can be the tail that wags the dog. Right now, Gwen, I've always wanted to respect the NASDAQ because it has the stocks that are weighted in the other two, S&P and Dow, more so than the S&P and Dow influencing the NAS. The NAS influences the S&P and Dow because of, a lot of the Magnificent Seven that we see, specifically XLK names like Salesforce, Apple, Microsoft, weighted in things like the Dow and the S&P. But it's not really right now those sectors that are leading. When is that going to happen? I don't worry about timing because there's no way we can predict, right? Once I start wandering into when something's going to happen, A, I'm deluding myself, and B, I'm forgetting that my job as a trader is to counterpunch, not to be, right, the one dictating the action. That said, right now, SMH and XLK are some of the weaker, two of the weaker sectors within the NASDAQ. So when will the NASDAQ be more influential on the other indices? I don't know when, but I know what it will look like. I know that when I look at this normalized performance, something that we look at a lot in the Sector Secrets Mastery, something I will teach you to read like a pro in our class on Saturday. I know when certain things happen, it's going to look like rotation likely. But when certain things happen, namely, they start moving up this list, that should be when we'll have a better read on the NASDAQ, specifically NVIDIA, semiconductors, Apple, Microsoft being more influential in terms of what the broader averages are doing. But right now, I'm actually leaving those alone. All right. And yes, if you did not know, gang, we do have a class coming up on Saturday. Tonight's webinar is going to tell you what the class is about, what kind of results I've got doing the thing I'm going to teach you on Saturday. And if you're struggling with account growth, you definitely want to join, because we're going to talk about some of the points that I've used all year to grow accounts all year. And I always like to be very transparent. I have had one negative month this year. It was April. And that came after January, February, and March, where I was up 180 and 60%, just about 60, in the first 3 months of the year. And then I had a negative month in April. How do we recover from that? How do we continue to keep growing an account? It's not a matter of whether or not we're going to lose. We are. How we lose matters. Did I undo all the great work of January, February, March in 1 month? Absolutely not. And that's what happens to a lot of traders. They might have a really great week, really great month, really great quarter. And then somehow they say, Rag, this is a common thing, right? So a lot of times, especially small accounts, tell me, Rag, I'm able to turn 5 or 8,000 into 15 or 20,000. And then I go right back to 5 or 8. And there's a very predictable reason for that. It happens to folks with 50 and 80,000 as well. But smaller accounts are probably a little bit more susceptible to this, because they tend to sometimes bet a little too big. So they'll get that $5,000 or $8,000 account to 15, maybe 20, and then slide back down. How many folks are going, yeah, Rag, you're talking to me. I think everyone's had that cycle, right? And those are some of the things that, once you understand, it's just a process of following a formula and building a watch list and position sizing. Oh, okay, I can follow that. And I think you're going to find it's a lot easier than you think, but a lot of the advice is counterintuitive. It's going to be things that you're probably not doing now, and you're probably seeing other people doing just the opposite. So it takes a little bit of programming, but it's very doable. And once that formula is yours, then it's a matter of rinse and repeat. And that's where it gets fun. That's where, by the way, we're what, 2 days in to the new month. And this is where we are in the mastery. This is where the process that I'm going to be teaching you on Saturday. Hey, see what I'm doing right now. These are our open trades at the moment. We've already taken profits out of gold. We have an open XLY position. We have 2 of them. We took profit in one already. We're actually up already in October, and we're only 2 days in. So that's the process at work. And by the way, notice the prices that I'm sharing with you all. Anyone here would have a difficult time buying a $2.50, $3, $4, $4.50 option? I think most of you would say, Rob, I may not be able to buy many, but I can. That's one of the keys, making sure that the options that you're buying are within a budget appropriate for a small account without, and this is so important, without being galactically out of the money, so that the move has to be massive to even see any kind of price appreciation. There are certain mistakes small accounts make again and again in an effort to grow quickly that sadly results in very quick account decline, right? If not destruction. All right. Let's see here. Questions. Eddie, a lot of folks have asked me about this. I don't in the least bit think that geopolitics have the effect on the broader averages that most traders do. A lot of traders are going to talk about the Middle East. I mentioned it 0 times. We took 2 profit targets off the table yesterday. It is far, far more important what the Federal Open Market Committee, those members, have to say. It's far more important what comes out of the monetary policy of Japan or Europe. It's far more important. In fact, what was so funny about yesterday, everyone was crediting, it's got to be the Middle East selling the market off yesterday. We didn't sell off until the bell. Remember, the futures contracts are open 23 hours a day. So I think and I appreciate the question. I think there's way too much emphasis because it's news and people like to talk about news. And to me, it just takes away from just setting up the darn trades and making some money. And so, no, I don't look at the news as what's moving the market. And I can show you, because go look at the market before 8:15. go look at the market before the FOMC members. It's not as if we're moving before that. We're moving on those events, which further drives home that is not what is happening in the in the broader averages right now. What are the average days? Ken, it depends on whether I'm setting it up on a 1 hour or a daily, but it's usually no less than 2. It's usually no less than about 20. It just depends on the trend. I mean, that's another thing that swing traders struggle with. What time frame are you setting up, and what is a reasonable expectation for a life cycle on that time frame? So it's usually no less than 2. So my 2 windows commonly are 1 to 3 days for short-term swings and 2 to 10, but we've had some that we've been in for longer than 10, and ultimately it's the expiration that would end the trade, obviously, because the ride's over. Expiration's here. All right, Michael says, I have paid off my 1-year subscription to SSM in 4 weeks. Wow, can we take a look at Honeywell? Yeah, of course. We'll wrap it up after this. All right, what's going on with Honeywell? So Honeywell on the daily time frame, Michael, is a choppy market, but it's turning bullish. Anytime we use these pre-defined criteria to have automated support and resistance, cut that zone in half. I'd say you want to get long calls somewhere through here, or if you want to be even more conservative, use the bottom quarter instead of the larger half to get long. Their first leg is going to be taking profits at the resistance level. The second leg is going to be if there's a momentum breakout, say through about 210. That's the way I would look at this. So that means entry zones are going to look like this, and maybe this, right? So split the range in half, buy in the lower half or the lowest quarter, pay yourself at the resistance level, which is right about 208.80, and then see if there can be a momentum breakout after paying yourself for that second leg of the trade. All right. And that's the 1, 2, 3 basis of how I trade choppy directional setups. All right. Thanks for the question, Michael. And congrats. That's awesome. Hey, look, you're putting in the work. I know we set the trades up together. We give you all the pieces, but you're putting in the work. So congrats. Thanks for sharing. Gang, have a great, great, great morning. Again, I will see you all tonight at 8 for our small account growth plan. All right. Be good to each other.